This is Greg Mikulowski with FXDD doing a commentary for FXStreet on the euro versus US dollar. And as the title suggests, we are heading into the European close here for the currency traders in that region, and the euro had definitely a interesting week. If you take a look at the daily chart here from a technical perspective, which is how I look at the market, is that we have this channel to the downside here, and last week the market broke through this channel support at around the 124.87 level, and that prompted the appropriate selling, the selling that took the price all the way down to the 121.43 level. That was the low that we reached on Wednesday. Since that time, however, I'm going to zoom in even more. That time, we have seen the market rebound, and the market rebounded with a nice move to the upside on Wednesday, closing near the highs, and then on Thursday we moved above this channel trend lines at the 124.21 level, and since that time the market has been pretty well supported. Today's low came in at 124.54, didn't really approach the trend line at 124.04, and we moved to a high price for the week at the 126.71 level. Now, off of this hourly chart, the other thing that we could note here is that this market, has been very well sold off. We came down from a high just in the month of April of 136.91 to a low of 121.43. Now, in my book, that's that's about 1,500 pips to the downside. In fact, a little bit greater than 1,500 pips to the downside. And a lot of times, that's good enough for a good enough retracement. We saw a quick retracement here in the beginning of May, and we perhaps are in the middle or near the end, or who knows where we are in relation to another retracement. One of the targets could be the 38.2% retracement, which comes in at 127.34. Now that bias remains as long as the price off of this daily chart remains above this channel support line. We'll reestablish the channel support line and say that this move to the downside was a break that failed. Move back within the channel, maintain our discipline against the channel support line. So 127.34 is a longer term target that we could possibly reach for the euro versus US dollar. Now let's take a look at the shorter term chart, like an hourly chart, and see what that is saying from a technical basis. And if you look at this chart here, we have our two moving averages. This is 100, this is a 200-hour moving average. And this week, after bottoming out at the 124.43 level, which by the way was a double bottom on the hourly chart, another indication of a bottom in place, and that gave the market the boost to the upside here, or the potential for the boost, and lo and behold, we did go up, tested the 100-bar moving average and moved above that level on Wednesday toward the close, and then on yesterday we had a little consolidation, a move back down, which took the market back below that 100-bar moving average. You can see here that we had a close below it here, but we closed above it here, and then for most, apart from this bar right here, the market was able to close each hourly bar above that 100-bar hour moving average. This gave it the bulls a little bit more confidence, and you can see the 1-2 bars before the big surge yesterday afternoon, we held that 100-hour moving average. This again is a positive sign from a technical basis. Why? Because buyers who are entering in here against this level, what is their risk? Their risk is if it goes below this trend line, it's a very small amount, and lo and behold, they got the traders benefited from this trades down at this area, and saw the market move up through the technical levels, through this 124.44 level, which was a high price from the Wednesday, and a ceiling that we had here earlier in the day, and then started its move to the upside. That move to the upside pierced the 200-hour moving average, moving even more sharply to the upside higher, and then by the close we had a couple of hourly bars that moved below that 200 200-hour moving average, putting into question this move to the upside. When the market was able to find support against the 200-bar moving average, we surged again to the high for the week, coming down again on profit taking. Where did we come down to? The 200-hour moving average. These types of moves are consistent with a market that's still not convinced that the market has the potential to go up. But since these levels held here, the market has gotten a little bit more courage to the upside and moved the market up into the midpoint of the day's trading range, at least, and it's definitely above the 200-hour moving average, which gives it a positive bias from an hourly perspective as we head into the close. What's the significance of this? Well, look at this 200-hour moving average. We've been in this trend to the downside, and quite frankly, apart from this little move to the upside here on that Monday where the market closed, where the market gapped higher off the $1 trillion aid package announcement, the market has been really below the 200-hour moving average. Again, a little break up here since way back when, way back here. You can probably count on a couple hands the number of times that the market has closed had hourly bars above the 200-hour moving average. So this move above here over today and yesterday is significant in my book. And when you put it in perspective of where we've been all the way up at this areas right here at 136.80, 137, and you follow that all the way down to the downside, seeing or being able to justify a corrective move further to the top side is not all out of the question. Now let's finally go to the 5-minute chart. This is the final chart that I like to look at. I look at 5-minute, hourly, and daily, and see how this shorter term chart is what it is telling us from a shorter term perspective in regard to our two moving averages that we look at, the 100 and the 200. And for most of the day here, the market was staying below the 100-bar moving average, our trigger line, but we did find support here around the 50% retracement of this last move to the upside. And in fact, this last move to after we fell a little bit below it here, came down to test these support levels here. The market then used that 50% retracement as a springboard to the top side in albeit a choppy type fashion here, and we move back above the 100 and 200 bar moving average. So right now, as European goes home, we have a positive bias off the daily in that we're above back into the trend line. We have a positive bias against in the hourly in that we're back above the 200-hour moving average, and for the 5-minute chart, our shorter term chart, we're above the 50% retracement of this last move to the upside. We're also above our key moving averages in the 38.2% retracement at the 125.28 level. And so, things are looking fairly good from a technical perspective, and that's the way we look at the market. You can talk all you want about the fundamentals and how the European situation is negative, but there's also, it takes two to tango, and right now the euro has a little bit of the upper hand from a technical bias over the US dollar, and hence we are seeing a little bit higher prices as London and Europe go home for the weekend. For those people in those regions, I wish you a happy weekend and a safe weekend. I will be off for most of next week. I will be doing a webinar for FX Street on Thursday. I'm going to be talking about what I call unambiguous and ambiguous trading tools and why you should use one over the other. So this is going to be a continuation of my series that started this week actually on Monday, and it's going to continue for the next 4 sessions, which are going to take us about a month and a half every other week or so to complete. So I wish you all again a happy and safe weekend, and we'll talk to you on Thursday at our webinar. Take care. Greg Michalowski from FXDD reporting or commenting on the market for FX Street.